Our next panel is the Fintech Frontier, Making Capital Accessible, Real-Time, and Personalized. Fintech is not simply disrupting finance, it is re-engineering the capital experience. Heading to the stage right now is Nabeel Ahmed al-Batlay, Head of Wealth Management and Consumer Segments at RAKBANK, Elizabeth Donaghy, Chief Operating Officer at Sarwa Digital Wealth Capital Limited, Monte Safieddine, Head of Research, Capital.com, MENA, and moderating this session is Patrycja Oselkowska, Partner and Financial Services Leader at Middle East Growth Leader at Deloitte Middle East.
Good morning, everyone, and welcome to this very exciting discussion about the new frontier, or maybe not so new, the fintech frontier. I did a very quick poll with my panelists before the session, whether it's a friend or foe, and everybody said it's a friend or even a best friend. So today we have representative of a traditional bank, RAKBANK. We have a representative of the fintech world, from Sarwa, and then we have, as he called himself, the adult in the room, representative of our research capabilities from Capital.com. So Nabeel, why don't I start with the adult? Tell us, as traditional, sorry, I got confused already. Nabeel, I start with you. Yes, we need an adult in the room. As traditional banks are increasingly integrating fintech capabilities, especially so on the retail side of the things. You here wearing the hat of the wealth management and customer segments hat. Tell us a little bit more, how are the wealth platforms evolving to deliver personalized, real-time investment experiences at scale?
Thank you, Patrycja. So we at RAKBANK would like to call ourselves more of a hybrid between a neobank and a traditional or conventional bank. We want to optimize that experience and take the best of both worlds to do that for our customers, to disrupt and to do that at scale. I would say there are three things that are really important. I think one is we believe that we want to partner with the best of breed. So the best capability and partners in fintech and companies across the globe, we want to make sure that we build those partnerships and bring them into our ecosystem to be able to provide those unique capabilities to our customers. I think a good example of that was our partnership last year with Bitpanda, which enabled us to be the first conventional bank in the UAE to launch crypto trading or to bring crypto trading for our customers. Obviously, Bitpanda is one of the largest and most preeminent platforms for crypto in Europe, and hence we felt that partnership was an ideal way for us to deliver the outcome for our customer, do it with pace, and do it with the best of breed. I think that the second piece is we're data and AI obsessed. I think all of you who are bankers here in the room would know that banks have a treasure trove of data. Often it is not used enough to be able to drive predictive interactions with customers, to be able to use context-based capabilities or context-based engagement of customers. We take that very seriously at RAKBANK, and there's a lot of investment and focus on making sure that we use that, leverage that data, which creates that customer portrait, bolt on an AI capability on top of that, and to be able to get that value to our customers. Recently, we launched something we call RAK AI or RAI. It's basically a generative AI chatbot, which real-time can answer any questions that you have with regard to your account, with regard to products, etc. instantly. So kind of bringing a lot of that technology to bear. This was built in-house. We are maniacal about making sure that we have the right teams and the models, the LLM models, etc., all in-house. I think the last piece very quickly is delivering a true omni-channel experience for customers. So how do you marry the digital experience to a face-to-face or an advisor or an RM-led experience? I think we believe that if you can have that optimal contact or that relationship where you can start a journey on your digital app sitting at home watching TV, and then you have some questions. The next day you walk into a branch and you sit with your advisor or your RM, and you are able to get all those questions answered and get to the outcome you're looking for.
So best of breed, data and AI, and omni-channel experience, bridging online and offline world. Elizabeth, as we move to you, coming from the fintech background, democratizing investing is central to fintech's promise. How can platform expand financial inclusion while still building trust, education, and long-term investor discipline?
Yeah, so democratization is a word that we love throwing around in the fintech space, but I think it's not just about lowering minimums, it's about reducing the complexity. And so when it comes to building trust, that comes from things like transparency, it's supported by the regulators, and it's about consistency. So making sure that the process happens consistently over and over again. I think there's a lot of room to grow as well here in the market. If you look at places like the US, you've got 55% of the population who are investing. Here in the UAE, you've got about 5%. If we look at our numbers at Sarwa, 80% of them are millennials and Gen Z. So we've got, there's a lot of room for us to grow across all of this for the first-time investors and make sure that everybody has access to build wealth.
Excellent. And Monte, how does access to real-time market data and behavioral insights change the way retail investors engage with markets, for better or for worse, perhaps?
Yeah, I mean, when it comes to insight, sprinkled with a little bit of FOMO or fear of missing out, that's kind of the spark that gets a lot of these investors to actually want access to a market. And that means you got to give access in terms of data. And at the end of the day, we're taught that the customer is always right. So you got to give it to them without doubt, even if at times you think that the customer might be wrong, or indeed the customer ends up being wrong. Now, roughly a decade ago, I used to work for a crypto hedge fund, and we offered just one product. It was a Ethereum long-only fund with a massive doctoral dissertation about how it's going to outperform against Bitcoin. Spoiler alert, it didn't. But the thing is, at the time, when professional investors came to us, they were saying, okay, great, you can think it's going to outperform. We'll go into this Ethereum long-only. And by the way, I'm in no way advocating for or against. But they said, okay, fine, we'll go for it. But can you offer a Bitcoin fund as well? It's like, did you not hear the presentation? We said that our expectation is that Ethereum is going to outperform. So now this is a case where if you look in the past, it actually did outperform. It did work in their favor. But there are times where it doesn't work in their favor. And even though we offer the option to short, and we do see them shorting some of these markets and doing quite well, let's not forget that having access to all of this in and of itself is not the solution to the problem. Rather, it's a prerequisite to being able to have these markets so that you can then plug and chug it within your portfolio.
And that's a fantastic segue to a question I would like to ask you, Nabeel, because that behavior, that FOMO factor, that kind of plays into the role of the banks in terms of responsible investing. So what role do banks play in bridging the gap between offering access, but also responsible investing choices?
Yeah, thanks, Patrycja. So I think there are three pieces. I think there's a very important element that is related to trust and relationship. Especially when customers are new to a certain asset class or new to a savings platform or investment product. I think the second piece is the ability to handhold that journey. So while you have the technology, you have the platforms, Is there a way to give people confidence that you're there to answer their questions or you're there to help them if needed? So there's, I think, that hand-holding ability that kind of comes in. And then I think the third piece is scalability, right? Or scale from a bank's perspective. Banks are able to offer a lot more because they have the capital, the infrastructure, and all of those things. I think a good example would be fractionalizing bonds. A lot of people are doing this. We launched our fractional bond business very recently, and here affluent, mass affluent, and retail customers can access bonds which were originally, not accessible at $200,000 per ticket. Now you can actually buy that $10,000 ticket product. So I think it's all of those things coming together, where you provide access, but you provide confidence, and that ability for customers to feel that they have somebody has their back, essentially.
But despite all this, mistakes do happen. So, Elizabeth, based on your experience, what are those common mistakes that people make? And maybe we all take a note of what not to do.
I think it's well known what the common mistakes are. So certainly emotional investing, getting emotional when the markets move, exiting an investment early, chasing trends is another really big one, and especially if that doesn't fit your ethos, what you're interested in, what you're attracted to within investing. I think some of the things you can do to mitigate that is certainly diversification, education, learning about things. I think the other thing that's really interesting, especially for the UAE, is to change the expectation. A lot of people here are very addicted to dividends and getting, cash payments, getting them on a regular basis, whereas I think there needs to be more of a focus on growth investing and what that actually means.
So, Monte, you've listened to Nabeel and Elizabeth. What responsibility do fintech platforms have in shaping investor expectations around risk, volatility, and long-term outcomes?
Yeah, I mean, when you have record highs and consecutive record highs and record highs across multiple markets, you're going to have a lot of people flocking there, a lot of fear of missing out. And then when you add to it an uptick in volatility, then as you mentioned, you're going to get the momentum guys, the trend traders. Everyone starts to flock and get in, and things can get very, very messy very, very quickly. Now, we went through this period where even investors with a long-term horizon have been seeing some seriously good gains in the very, very short term. So they don't have to wait a very long time. And they won't say no to short-term gains, but that means that they've gotten pickier, their expectations are higher, they're getting greedier, which can be more dangerous than fear at times. And the solution, aside from the awareness that you mentioned, the warm, friendly reminders from myself from time to the clients, but within the platform, what we've done also is on certain assets, you can change it so that you remove the volatility entirely, so like the leverage entirely. So on cryptocurrencies, for example, you take it down to zero. On other areas, you kick it up a notch. And also, we're planning to update such that it'll inform and warn if your size is too large with respect to your portfolio, if you're about to invest in something or trade something, and also when it comes to risk, whether or not you're ready to take a loss, because let's face it, at the end of the day, none of us really like to take a loss, and we're willing to lose everything to avoid a small loss. I mean, if this is a small marital dispute, that's fine. You're right 100% of the time, your significant other is wrong 100% of the time, but when it comes to the financial markets, you have to accept that even the best in the business will get it wrong from time to time, and that means you need to be prepared accordingly.
And with this, we conclude our panel. Thank you, everybody.
Thank you.
Thank you.